Hey everybody, thank you very much for joining this very first Twitter space from Amulet. I wish I could do it in more or better circumstances, but we do hope to do a lot more of these in the future. For those that don't already know, Amulet's a new DeFi insurance protocol in the space, and we're built on Solana for the Rust ecosystem, and whilst that's all very good, we've had a bit of a tricky time in this, in our crypto industry over the past couple of weeks, and probably some pretty unprecedented, events have happened. A lot of people, said, what happened in the past week or so has been entirely avoidable, but regardless of whether or not it was avoidable, it's taken billions and billions of dollars with it. So anyway, today I'm delighted to be joined by some of the DeFi industry's best people and players and protocols. So I'm not going to dwell too much on them. I'm going to let them introduce themselves. So with that being said, Hugh, would you mind giving us a quick 1 minute on you and your background?
Yeah, hey, thanks. I'm Hugh Papp. I'm the founder of Nexus Mutual. My personal background is insurance professional. I'm an actuary by training. And so, yeah, I've been doing insurance stuff for quite a while, 15 years before starting Nexus. But, yeah, obviously some difficult times over the past few weeks, but very interested to have a chat and see what others' perspectives are on here. So, yeah, great to be here.
Thanks, chap. Moving on swiftly, we've also got Dan from InsurAce.
Yeah, hi guys. Dan from InsurAce here, the CMO. From what I'd call the battlegrounds of UST DPEG situation right now. Yeah, we've been just dealing with everything from the last week, so everyone's been working extremely hard. But yeah, myself, background in crypto for a few years now. Been working with InsurAce since we launched a year ago, and yeah, I guess InsurAce is as I'm saying, DeFi insurance protocol. We all are, but definitely, yeah, I don't know what else to add right now. Sorry.
It's been a tough week, certainly on your side.
Yeah, so to speak. But yeah, no, we're getting through it. We're just working through the claims and staker issues. I'm sure we'll get on some of this as we go through the talk. But yeah, no, we're going to go into it all. But yeah, insurance has been covered a lot of DPEG for UST, and is working through the process of going through the claims and managing that process at the moment, which is causing quite a lot of quite a tough week for everyone involved, not just the team, but also obviously stakers and cover holders.
Well, look, thank you very much for making the time to come and join this Twitter space so that we can discuss exactly that. I've just seen Kirill, Bright Union. Are you on? Are you able to unmute?
Yeah, I'm here. Hey guys.
Yeah. Give us a quick 1 minute on you and Bright Union.
Yeah, sure. So, yeah, my name is Kirill. I'm a co-founder of Bright Union, and what we do is we are basically DeFi insurance aggregator. So what we do is we aggregate multiple platforms out there and provide people with the tools to make the most educated guess which cover they need to search for, what the best prices on the market are, but also for the people who want to provide the capital for the DeFi insurance. So we aggregate, some guys over here and some guys to come soon. Basically the 1 inch for a DeFi insurance. Let's put it like that.
Very cool indeed. And last but certainly not least, Robert, can you give us a quick 1 minute on yourself?
Yeah, so I'm Robert Forrester, director of Ease, formerly ArmorFi. Ease uses a new uninsurance coverage model, essentially the simplest form of risk sharing possible. User gets our DeFi token, deposits it into the ecosystem. If anyone faces a loss, the loss is spread throughout the entire ecosystem, and everyone pays back to people without loss. So we don't deal with predictive pricing or underwriters required for coverage, and It's much more resilient against black swan events, and users just pay the minimum price possible. Me specifically, my background is mostly DeFi, I guess. Had a lot of focus on security and safety. I think the safety of the ecosystem is the only way we can avoid hard-handed legislation. That if we do everything we can to make users safe now, regulators will give us time to figure things out before they go hard with the regulation, and we can really advance this space.
I couldn't agree more with you. I don't know whether or not we'll be able to hold off the heavy hand of regulation, especially with some of the tighter rules that I think might be coming following this event. But look, thanks guys, thanks everybody for being here. If anybody in the audience has any particular questions, please don't hesitate to tweet at me or at Amulet Protocol. We'll try and get to them. And if you don't want it to be public, by all means, do a private DM to either one of us, and we'll try and get to that as well. So, look, with that being said, let's get on to some of the level setting and looking at what happened over the past week. My first question really is UST. What happened in your eyes, and was what happened really avoidable? Could we have got around it? And I'm going to throw that one out there. I'm going to pick arbitrarily. Hugh, are you able to give us a bit of a comment?
Yeah, it's a difficult one. Like, I mean, I think it was avoidable at that scale. I mean, I think one of the things I really like DeFi about is you can experiment with a whole bunch of things. Now, one of the biggest problems here is if you experiment and you're experimenting with lots and lots of people that don't really understand exactly what you're experimenting with, then you can end up with some really big problems. And I believe that's what's happened here. And, things grew pretty quickly, got out of control, and there was underlying risk that was built up. So, I mean, I think it's, hindsight's 20/20, especially when it comes to risk stuff. So it's very hard to kind of identify these things when you're kind of going through it a lot of the time. However, I guess on this case, we had a lot of people saying that the models were I guess fundamentally flawed for a long time, and I was personally in the middles there somewhere. So I can't necessarily blame people for thinking that they weren't. Was it avoidable? I mean, I tend to, if you're running new experiments, then I tend to want to cap things at certain scales before they're like fundamentally proven to scaling up more broadly. So I guess that's my one of the things that I guess worried me about the whole situation.
Yeah, I totally agree there. I think it was somewhat unavoidable in that people will ape into anything. People can be sold anything. I think the team could have very easily capped their funds, not gone all in. I think essentially every DeFi protocol should focus on growing slowly. We've seen it a million times before where a protocol markets the hell out of themselves, gets hundreds of millions, billions in TVL, and is immediately hacked. And for the safety of the ecosystem, we just need more time to figure things out than that.
To add to that, so two more aspects to this issue. So first is which pretty sad, that people, and that's not moon boys, right? Not the ones who typically suffer when they chase in the 200,000% APY. In this case, people who are being really on the low side of the risk or their life saving. So that's really sad because it's not really typical, I would say, again, in hacks and stuff like that in DeFi. And the second aspect, totally different again, is that, well, DeFi insurance worked out, right? I mean, that's great because it worked out at scale. Perhaps Dan can explain more on that, but
yeah, I was just wondering what Dan's response would be on that particular question.
No, don't even get me started. I'm still just thinking about Terra as a whole and what people could have done, and when we get to sort of scaling things. I just want to say about could things have been avoided? Really, Yes, yes and no. It's some people realize this was an issue. There was a lot of people writing out there about why this could happen, but there were a lot of people writing out there why this couldn't happen. Should the Terra team have done something about it? Could they have done anything about it? Are two very sort of big open questions. We've been presented with a load of information in the last week. Everything from all the sort of speculation whether Terra were behind it or not, whether it was X fund or Z fund, or whether it was just something that was basically bound to happen at whatever time. It's this will continue to evolve, and there'll continue to be theories. But at the end of the day, could they have done something about it? Yes, but they were probably presented with a million other sort of routes that the market would have taken, and what could have happened. So again, in hindsight, it's very easy to say, oh yeah, they should have stopped that. But this was one of the eventualities that a lot of people knew about, and a lot of people said could happen, and it just became more and more likely until it was unavoidable.
Do you think there's a benefit then out of this? The fact that it even occurred in the first place, and we're showing, to Kirill's point, is the fact that this happened and there are now substantial payouts happening in DeFi insurance, is that a benefit to the industry, or is this going to be a greater kind of hit? That's going back to you, Dan.
Yeah, I mean, it's super hard to try and be positive in a time when so many people have lost so much. Obviously, there are out of every bad situation, especially in an emerging industry, there are a lot of developments and improvements that can be made, not only to Terra, whichever route they choose to do something with, if they even do, but with other blockchains that consider doing something similar, other algo stables that do something similar as well, but also to the insurance sector. If this works and this will be, a huge, case study for what we're all doing here. So if this works, and it works in what is perceived to be the right way, and there is an extremely delicate fine line that I am currently tightrope walking at the moment. It will be a massive boost to this particular industry, because people will see that it works, and that the reason we are here is actually a functional part of this industry that is not only needed but should be encouraged a lot more.
So, Hugh, you obviously stablecoin DPEG wasn't part of your offerings. I'd be curious to know if this was something that you guys had looked at in the past, and if it was scenarios like this, why perhaps you might have gone away from it, or it was something you were going to just go towards in the future.
Yeah, we specifically looked at all the algo stables a while back, about a year ago, and specifically decided not to cover any of them. We just thought the risk was too high. So, that's, I guess, looking like a good decision now, but I wouldn't say, I guess from the other perspective here is, when that first DPEG happened and then it bounced back up to 92, 93 cents in a day or two, at that point I was like, well, maybe these things aren't quite as risky as I thought they were, and we should discuss actually covering this stuff for DPEG coverage and all the rest of it. So, I'm by saying this, I'm not saying that we had a crystal ball or anything. We definitely didn't. We deliberately chose not to cover it because we thought the risk was too high at the moment. But at some point, our view was hopefully this can decrease in risk over time, improve itself a bit more, and then we can look at covering it. And so that was kind of the general view that we were having.
The same goes to you, Robert. Have you guys look at these things? Is it something that you would consider doing in the future, or now that we've seen it that it's depegged, the UST depegged, that algos are definitely going to even take a hard look from you and your team?
It's hard to say. The biggest problem I see with it, I guess, is actually what many people didn't pay attention to the past week is the at least three other hacks on Blizz Finance, Mushroom Finance, Venus Protocol. That it seems there was a lot of correlated risk within the system, that one coin falling in that regard could have had a sort of domino effect, and luckily none of us were really exposed to that. but it worries me in terms of how safe, how diverse, how much we can actually guess at the risk in something as widely used as that we've thought about stable coins. But if we're covering USDC, that's going to have so much exposure for us. But the thing is, I want to, after this has happened, I've wanted to cover it more and more. That reading the stories of everyone who'd lost funds, who'd lost many more funds than they could afford to lose, has made me want to figure out more ways to help with the problem.
That is a really good point. You touched on this one earlier about, you know, how it's insurance is an absolute necessity in the industry in order for ourselves to be able to, you know, protect users, protect more institutional funds coming into the space, and I suppose add legitimacy, you know, to the overall way that the crypto space is protected. I suppose my question is, do you think, therefore, let me reiterate, the fallout is, in my eyes, will be there's going to be a huge chunk taken from folks like Unslashed and InsurAce, and that's going to really impact on their stakers, and I think it's going to impact stakers for all other DeFi protocols as well. Or at least, so in as far as that, people are going to have another think about DeFi insurance. If we had collectively as a TVL such a great figure whereby actually these hacks and DPEGs and whatever else we're covering was a relatively small figure against them, do you think that would solve the kind of run on bank situation and concerns that I could see potentially happening over the next few weeks? I'm going to throw that back to you, Robert.
I may be cheating at this question because our protocol doesn't use underwriters or anything.
I really have the error of my way throwing it to you.
Oh, no problem at all. But yeah, so essentially the demand from users themselves actually cover each other. But I was actually talking to Kirill briefly yesterday, and he was mentioning reinsurance, and that would play a very important part in circumstances like these. That could help a lot. If you want to expand on that, Kirill.
Yeah, exactly. So again, speaking of comparing traditional insurance and what we are having here, is that it's insane, right? The risk that capital providers are bearing is really, really high. And what happens to, let's say with InsurAce is typically must have been covered by reinsurance capital, which I think pretty much no one has at the moment. So capital is the issue and risk is the issue. And, but again, like in Robert's style, so to shield ourselves a little, is that's exactly why we launched our Bright Risk Index, the capital pool, single pool, which puts capital in multiple guys like here. So, and if you can see that someone was hurt, someone was not at all, someone a little, and it's just too risky to put in my mind to one single bucket. So, that's exactly why we launched the index. So basically the money are spread over to get the maximum diversity and, reasonable return. Also, by the way, I wanted to say that a little bit on previous question, about the domino effect, right? Because we tend to tell how cool DeFi is because it has this Lego nature, like everything is connectable to everything, and you can exactly see the drawback of that concept, right? And this only happens to UST. But can you imagine just for a bit what would happen if, let's say, DAI loses its back, right? DAI, which is the backbone of hundreds and hundreds of protocols out there. Or a bit of a smaller scale is the cross-chain bridge, for instance, which also holds hundreds and hundreds of assets. How big the domino effect would be? It's just insane. it's a huge risk here. So yeah, we offer, again, repeating myself, so we are offering the diversity to risk bearing, but still long way ahead.
As soon as you came up with that, the first time I found out about it and you told me about it, I was very pro it in the first place. And I do think it's a great idea. I suppose my question, come back on what you were saying though, was why is it just DeFi that's so easily connected and unable to break the strings between us? What's the difference between this and the traditional industry? Is it just the fact that we're all using these similar coins and it's so small and so we're held together, or is it the fact that is the principle of what we should be doing? Kirill, as you mentioned it, I'm going to ask you to answer on that one.
Yeah, exactly. You're right. It's exactly the nature of interconnectability here, because in traditional risks, well, you've been losing your car and your house at the same time it's not even there, right? You can easily diversify from different types of risks. Here, even if you diversify between some institutional and maybe exchange, and then a little bit of stable token, a little bit of DeFi, and a little bit of shitcoin, it's still, might be that you are actually still hold all the eggs in the same basket. And it's a nature, yeah, it is a nature. I'm not sure it's pros and cons here.
So, this kind of comes back to like the avoidability question. Do we as an industry then have a responsibility to investigate these structures more and like highlight them and flag them or red alarm them, or is there a system that we should be doing more when we see these? I mean, Dan, I'm going to go back to you. Obviously, unfortunately, you've been hit the hardest on the call, but what's the next steps for the future on this? Are we able to focus on an investigation technique or something?
Yeah, I guess it's having a trusted independent body that we could really go to for this kind of stuff, I'm sure there is, would be extremely helpful. But again, there's so much information coming out, and because there are two sides of this coin, you've got the policyholders who are claiming, who obviously want to get paid out. So obviously their sort of information bias is on that this is a full sort of qualifiable DPEG event. Then on the other hand, you've got stakers who might be at risk for some of their capital, which they might not be happy about. And some of our stakers aren't happy about the fact that they're having to pay out for this. And so some of the information bias come from that side, is that it isn't a DPEG official event, that it's market manipulation and some other kind of input that might invalidate the entire system. So should we investigate this? Yes. I mean, we will be putting out reports with a summary of what the up-to-date information is, but there's also the concern of if there are compensation plans, for example, for some of the smaller holders, as you know, or a direct fork of the entire original Terra blockchain in whichever form. These are all sort of repayments for possibly some of our policyholders who may then be essentially getting a double payback. So is that then something that we should be delaying for and waiting for, which does in a sense kind of give us more time to figure things out, but it also holds up stakers' funds for longer, and maybe to the frustration of some of the policyholders. But is there a fair time limit to do this with? It's a very difficult situation to be in the middle of, and some are suggesting that an obvious DPEG is an obvious DPEG and it should be paid out automatically. So I think out of the back of this, I mean, I know us as a team, as a protocol, we'll be adjusting a lot of our systems, a lot of our policies, a lot of things that come out of the back of this that have been raised by arguably an extremely passionate and motivated few groups of individuals who are obviously defending their own best interests, but a lot of them do have extremely valid points. In terms of actually having a role in investigating this, yes, we should be very, cautious about reading the information, but at the same time, it is still DeFi, and there are incredibly intelligent people out there who are investigating this, sometimes with bias, sometimes without, that are putting the information out there, and it's just about being able to absorb as much of the information and sift through some of the known rubbish in the cryptosphere and focusing on some of the more quality investigations that are out there. So do we need to conduct those investigations ourselves? Not necessarily, but should we be extremely efficient at sifting through the information? Definitely.
Yeah.
Oh, sorry. Rob,
if I can hop in real fast. I definitely, I don't know if we necessarily, if our protocols themselves have a responsibility to investigate things like this, but I do think we very much have a responsibility to encourage investigation of things like this. I've recently thought a bit about regulatory committees, DAOs, whatever they would be, in terms of rating protocols, approving protocols for whether they're safe and this and that, and we have many different teams building similar things. And I think we should absolutely be encouraging that, not only for the users, but even for risk assessment ourselves. If we need it, it'll help a lot there.
Do you think it should be done something a little bit more coordinated, like something as a, going back to what Dan was saying in terms of like an industry body or like a thought like 100%. That? Or, yeah.
Yeah, 100%. I think it would be fantastic to have essentially approved protocols, approved by some impartial board regarding many different statistics on safety and how vulnerable to different market conditions they may be. I have no doubt at all it'll come about soon. I definitely think it's coming.
Where does that come from? Does it come from the auditors, or is that? Sorry, carry on.
Sorry, I may have misunderstood, but I don't agree on this one. I think each protocol or each insurance system or whatever should make its own decisions about what risk it wants to underwrite, whether or not they're an approved one or not. When it comes down to market dynamics, look, if you restrict things, you stifle innovation at the supposed benefit of making things, I guess, more resilient. But at the end of the day, each protocol needs to make its own choice on its own risk reward settings. Just stepping back even further, like the vast majority of reasons why insurance companies go bankrupt is because they take on market risk, because it's correlated. And they either stuff them on the asset side, or it's a combined risk on the liability side that they didn't plan for, or they didn't quite see it all coming together. But they write big product lines on one bit, and effectively big exposure to market risk. The market tanks in whatever way or form, and then they're underwater. And so that's like we should. The market kind of has to sort these things out. I think getting big regulatory bodies or whatever, groups of DAOs or whatever, to kind of decide which things we should cover and which things we shouldn't, I don't think that's the way forward. I think the space in general is going to benefit a lot from having encouraging high quality risk analysis, and I think in general, because of the nature of crypto with, number go up and all the rest of it, that's very hard, and we'll always struggle to attract people to do that because they'll just get shot down as FUD and all the rest of it. But I think it's incredibly important that the insurance protocols can foster these types of analysts, whether they're part of their protocols or not, or they support them in whatever way. There's a whole bunch of options to do that, but I think in general, if the insurance DAOs out there can foster this type of analysis and that type of rigorous work, the better off we'll be.
Yeah, to be clear, I totally agree with you in terms of your thoughts on we have to have our own choice on what we can onboard and what risk we apply to them. I think where I was going with this was more investigative after the fact, in order to share learnings of what has happened in that scenario. and having a board to do that, saying as opposed to individual protocols, because individual protocols, like for example here, InsurAce doing an investigation on UST, it's going to be biased, right? It has to be biased because they're doing it in the interest of their own communities and their own product, and they'll try and be as impartial as possible, but there is always going to be bias involved. If it is an independent body that has a few people supporting it, I would hope that it has less of a bias, but it's always going to be biased towards that industry, I guess. Sorry, Rob, I cut you off when you were about to make a point.
Oh, no problem at all. It was just a question, I guess. I agree, definitely. Coverage protocols themselves shouldn't be restricted to what they cover, but Hugh, do you think there should be some sort of ecosystem-wide, I don't know if I'd say regulatory, but a body that can easily display to users what protocols are essentially deemed safe to the community?
This is essentially like a curation type task or a risk management analysis type task. I think it's very hard to describe exactly how to do that, because no matter when you come up with a system or whatever, either you've got gating problems or you've got manipulation type problems in terms of getting on the list, depending on how the curation works. So I prefer the market to kind of develop that naturally. So, I don't think having like a specific group, because, that specific group can get things wrong. You have rating agencies like Moody's or whatever, like those types of things. It can, it definitely helps in some respects, but it also doesn't, not necessarily, I don't think, what we should be aiming for. I think insurance protocols, one of their key benefits or their key differentiators is how they actually underwrite and price risk. You need to do that in whatever shape or form, and I know you are going with a different model. I still think you kind of need some level of pricing in there somewhere, relative risk scoring, etc. Otherwise, you end up with all the bad risks. But you have the key to success for an insurance protocol is being there in the bad times, but on the long-term basis, pricing risks at an appropriate, sustainable level. And so we need to encourage that, and we need to encourage that more widespread. But that's kind of like a key part of an insurance protocol's ability to compete. And so I don't think we should be I think we should be letting the market solve that one, is where I'm going.
Yeah, I mean, I've actually something to add. Sorry, you guys just triggered an idea by saying not having a sort of central regulated body as such. There's a solution that's come out of the discussions I've been having about sort of actually not only investigating the actual sort of depegging event or hack or whatever else itself, but actually investigating the claims themselves for fraud. And one user's suggestion was actually to put essentially a bug bounty out on the claims process to spot frauds with a commission on that. There's actually maybe no reason we shouldn't be able to do something like that as almost like a bug bounty on essentially outsourcing the information to a wider DeFi community to compile the most accurate information for a sort of report or a post-mortem analysis on a particular event. Which could be a way around a regulated body, but at the same time, finding a very uniquely DeFi solution to this problem. And we all put a small bounty out for it as combined, and get a few quality reports published. Could be a way of actually exploring getting a concise amount of information, essentially sourced by the wider community.
Kirill, I'm curious, you've been a little bit quiet in this particular part of the chat. A lot of, connection to the wider, protocols out there and, through Bright. Is this something that you've considered or would look at doing, as a, like similar to your index, or, is this, well off track for you guys? Aggregating is the only thing.
Yeah, sure. So from the very first day, we had in mind this risk assessment tool, right? And even super damn stupid just sort of the rating or something like that. Just had in mind at the very beginning, because exactly that's something for us to compare the guys. And I agree with Robert and Hugh here, and disagree with both of them actually, is that indeed, regardless, there will be some risk assessment tool or a DAO perhaps with some common rules out there. The beauty is that comparing traditional insurance, none of the companies or insurance protocols have to follow that and comply, right? That's the whole idea of what we are doing here. You don't have to, you might. And I'm an IT guy, so I know that, so give an example of, let's say, Linux core, right? That's something, there is a core, however, it has many different forks and implementations and varieties. So I believe that here we will have something similar instead of some common regulation, like from traditionals, like solvency or something kind of that. We will have there multiple ones, which will allow this healthy competition Hugh was referring to, different price and a little bit, difference here and there. But I believe that there will be some core initiative. The beauty is that it won't be a company or a government organization or anything like that. I believe it will be a DAO out there. And we are keeping an eye on some of them, some initiatives, not much progress so far, but willing to also join, because basically we believe that it will happen.
Sounds like you're an Avery chap. There's a lot of birds behind you.
We got the biggest offering out there in terms of the protocols, right? Is 250 or so. So yeah.
I was going to start with this question earlier, and so I'll kind of come back to it now. But Hugh, you've been through some pretty big hits over the past 6 months or so. But it's probably a bit longer than that. What did you guys do in terms of investigations and postmortems on the on the smart contract hacks that you had? And what I'm kind of thinking about here is really around Cream, and I think on Badger you guys that was a front end hack, so it wasn't covered by you guys, but you still had to deal with the ramifications of that. What was the investigation process like? What did you learn from those processes?
Yeah, I mean, one thing is there was no coordinated investigation by anyone. We're essentially relying, the claims assessors, generally people in our claims channels or our members of our DAO, generally collating information, like from, I don't know, people like PepShield and others that do tend to do reports, or whoever, about especially on Cream or something like that, where here's the technical steps of what happened, here's what the issue was, there was a bug, or there was an Oracle manipulation, or whatever it was. And so, generally, it's more about collating information that's out there. And then the group of claims assessors just coming to their own independent decision and voting. And so, we tend to put out postmortems in terms of, this is how many claims we paid and all that type of thing, but rather than, we don't actually coordinate a specific investigation into anything. And I kind of view the fact that, one of the strengths of the products that we're offering, if you create the product correctly, then, and this is hard, I'm not saying this is easy, then you should try and remove as many grey areas as possible and fall back to as much data-driven stuff as possible. Now, I agree that's not always the case, there's always going to be some grey, etc. But one of the keys here is designing the products in the right way, that it is actually relatively easy to assess if there was an event or not.
Yeah, I feel Dan may have some interesting perspective there. I've been in their Discord for a while, and I don't know how gray area it is. I feel like market manipulation would still be covered by them. But I've definitely seen a lot of the stakers there. I feel it's less that they're not necessarily clear and more that they may not be happy about their own situation, I guess. If you want to add on to or clarify that.
Yeah. I'm glad I don't know if you've been enjoying watching the,
oh yeah, been watching closely.
The last 4 days, watching my 18-hour sort of like battles every single day. Yeah, in terms of design, Hugh is right to an element that designing products that are, stronger and more concise is obviously the goal, but it's such an evolving industry, it's very, very hard. And with such, as I said earlier, such conflicting information to come out, and we want to be better. We want to make things faster and more efficient. We want to make things more clear cut. We want to, ideally have everything, straight on chain. If you can have that independent sort of verification somehow that, verifies, something's happened and have an automatic payout, or have these aspects that help us to improve, the product, not only selection, but also just the actual curation of them. It really will help, but also at the same time, this is the first major DPEG event that's causing any sort of payout. We're all going to learn from this, whether or not we either continue or start to have DPEG products. But this is going to be a huge case for everyone. Ourselves, as I said, we're going to be improving massively what we do in terms of not only looking at new sort of stable coins to list, but also in terms of our overall exposure on any particular product. And in terms of our stakers, their major concern is that it's a slightly more sizable payout than they would be expecting, and everyone is suffering the market right now. So I guess that everyone's just on damage limitation to try and avoid that. So do we continue the same way? Absolutely not. Do we improve from it? Do we learn from it? Do we grow out the back of it? Yes. Do we, adjust everything we look at for not only the way we approach them, but also, the actual sort of risk assessment of the products we're listing? Again, it almost sounds stupid now. In hindsight, it is a 2020 view, but it almost sounds stupid to say we've been hearing rumors about UST, problems for ages. Personally, I knew it was not knew it was going to happen, but I knew there was a point that I'd be jumping out of Luna personally, and to even know that in the back of my mind and still be on the other hand, day to day, almost like selling insurance for a product that I myself thought was a risk is now seems extremely stupid. But at the same time, it is DeFi. People do get excited by potential gains and upside, and it's it's just an evolving industry. We grow. This will improve a lot. How we can actually look at these products, and yes, there are other sides to it. You've got the stakers who really are passionate as well, and they were slightly overlooked, assuming that they all understood the risk entirely. And there are stakers with us who essentially are the underwriters who maybe didn't do their due diligence when staking with us to begin with, so they didn't understand that their funds are at risk, or they didn't understand their funds would be locked. We've had people trying to game the system, unstaking way in advance and then leaving it in a withdrawal pool because then they wouldn't have to wait 15 days in the event of a claim. So when everyone's funds got locked up at the same time because of the claim, they're the ones who have been shouting the loudest. And it has been difficult, and there are a lot of people who have a lot of their money either lost in UST or staked, and potentially losing a significant chunk. And I've had to deal with it all, everything from, people saying their life savings are in this or that, and it's extremely hard to, deal with people in bulk, and such personal level and such an important part of their lives. And even and it's horrible to say, but even some people saying they're going to take their own lives because of this, and it's being in the middle of that and trying to balance that with at the same time essentially running essentially operating on behalf of a business and trying to ensure the future of that business as well to help people down the line is an incredibly tough aspect. If I wish that there was a way I could just take myself out of it, but there is still a very much human element to this, and it is still so new. It needs people from the team to be engaging, to be, a part of this. And we I guess we tried to reach out to Unslash to try and get them on here for their opinion as well, and it'd be great to hear from them. But having been essentially in the middle of all this, it has been tough. It has been interesting to see, but out the back of that, not only we'll learn, but it should be a great case study for anyone in the space, anyone trying to do anything in the space for anything they look to cover in the future. Because if not, it's not only sad for a lot of people, but it's extremely infuriating for the people who maybe are frustrated by how long the process takes, or by not knowing and by not having that information ready to hand immediately. Really has been one of the most difficult parts of my job, because we can advise on the information we have, but then 2 days later we find out that information wasn't right, and the person who asked should they have sold their UST 3 days ago at 0.8 and it's now down at 0.15, and then finding out they're not coverable because of whatever exclusion is just something awful, and that really shouldn't have to happen. So yes, we do need to improve everything here. Sorry for ranting.
It's all right, chap. I think we can get the point where you're coming from in terms of the stress and the pressure that you've been under. But you touched on a bit of an important subject there, and something that I've been talking to a whole bunch of people about over the past week or so, which is, where does the fault lie? Who is it? The fault of the user for not educating themselves enough? Is it the fault of the developer for not having seen the structure and executed it on behalf of Doe? Is it the fault of the guys pushing it down with the downward pressure and wanting this thing to implode so that they made a fortune? Is it Doe himself? Is it his fault? Whose fault is it? Who's going to take it?
Yeah, I can. So basically, it's a bloody shortcut, right? I mean, it's bad maybe to tell, but it was clear or expected from the very beginning. So when in this tech does not tolerate the shortcuts and the quick solution. So if there is a 20% of tech and 80% of marketing, well, be prepared for the situation like this. And it's been, now of course everyone understand that and super clear, because if you scroll back to over past year at least, there were lots of marketing, a lot of punishment. And anyway, so and the risk was super high, right? It was clearly under collateralized stable token. So well, this tech doesn't like that. I mean, if the same will happen, I keep saying that the same will happen with quick and dirty built cross-chain bridges. The same happens with their side chains and will happen, etc., etc. So that's the world we live in.
But broadly speaking, like going forward, like what is it that we have to do? I mean, look, if you go into any fintech share that sells shares or anything like that, there are warnings all over the place. Or certainly they are in Europe. Robert, I'm not so sure when it comes to things like Robinhood, if there are warnings all over that as well. But any app you use here in Europe in the fintech space, there's risk warnings all over it. And I think even the stat is on the bottom of eToro, they have a moving number that says 57% or 67% of people that utilize this website will lose their money. And yet with Anchor, we had a scenario where right front and center it says better savings. And at no point is there a risk warning. But that is endemic across the whole of the ecosystem. It's not just it's not just Anchor here. So what sort of level of responsibility do we have as people who run protocols in order to educate people before they get too far down the line?
Yeah, we've been thinking about this as well. I mean, we can take our own. One thought is essentially we can take our own risk assessment for our risk ratings and risk rankings, and create a plugin or something, create something that can directly notify users of the risks. I don't think we can rely on protocols to do that themselves. I don't think we can rely on their marketing to do that. I think users need essentially a centralized source that can at least tell them what risks there are impartially, if not, will probably not tell them it's safe, but at least the full risks. I think it would be extremely important for the industry. Something I was getting at a bit earlier, that some sort of unified source like that to tell users. I really don't think it's users' fault at all. I mean, if you're used to a system where you are told the risk and then they say it's the best savings possible, I don't think you can be put at fault. And a certain amount of, I guess, back to the protocol's growing slowly. I mean, there's such a temptation for everyone to start marketing immediately, trying to get $1 billion in TVL immediately, and that's just so dangerous for working out systems. If you're doing something new, you can't just do it that fast. You have to grow slowly and safely.
I always notice the little turtle that is on the Nexus stuff, Hugh, and I've always thought about is that like your little nod towards building over time? Because I remember, when you were out pitching, many years ago, I came across Nexus, and it was unique in the marketplace, but you also went straight into a bear market, and you had to survive through that and come out on the other side. So do you think, now that we're going into this next bear market, that actually this is a good opportunity for companies to build with heads down and less pressure from investors?
I mean, yeah, I much prefer building in a bear market, yeah. but I think in general, kind of going back to the main points, like, I guess there's two things. One, we should be disclosing more. I think we all need to do better on that side. I think that's a kind of given, and everyone can improve. The other side of it is a lot of us don't know what the risks are. I think it's, everyone's kind of, okay, hindsight's 2020. Like, everyone can go back and go, like, oh, that was really risky. Like, why didn't we stop people? Well, like, a lot of people didn't think it was that risky. I would have, we didn't list DPEG coverage, because we originally thought it was risky. We were considering, adding it on, like, recently. So, and I don't think the InsurAce crew, like, knew that, the levels of risk that they were actually taking on. I mean, it's a bit more obvious now, but at the time you didn't. So, I think, we need to disclose more, but it's often hard to disclose things when no one really has a solid idea of what the risks are either. So, there's a lot to this, and there's no, like, real easy types of solutions.
Dan, same question to you.
Yeah, same. I mean, there is no way of knowing, really. We learn, we adapt, we just make sure we build our own systems well enough so that we assume the worst and can survive through it. We possibly teetered on the edge with this one a little bit, but we will get through it. It just means, you improve going forward. People will approach stablecoin insurance differently. I think that they will approach it, definitely following this. I think it's a great example, but at the same time, it is a way of, really looking into them a lot more. Even just people creating stablecoins now will be, really considering it, and people buying into them as well will be digging into it a lot deeper. So all round, I think the whole safety around stablecoins will become a lot better. So in terms of improving that, it's going to naturally improve. I think just organically, I don't think we need to do too much. I think that is an obvious progression out the back of this. It's just a big sort of case study as to how people approach ecosystems, how people approach stablecoins, and how people approach insuring and buying insurance for them. Assuming, the payout goes well and people still trust insurance, protocols after this. So it's, yeah, it's a very delicate situation we're in right now, and it will be a great case study for the future, and how we all approach things going forward will probably come out the back of this. Same goes for some of the original larger hacks that Nexus have had to pay out for in the past. So it's these are every action we set really does create a precedent here, and it's how we learn and adapt from that as individuals, protocols, as an industry, that will help us all grow and help us make everything better for the future.
Kirill, given that you are an aggregator, and slightly different from the rest of the panel here, but do you think your guys are going to be impacted more or less than the underlying protocols that you work with during the bear market?
Oh yeah, I'm not sure about the bear market. Yeah, it's not great for us, of course. Clearly, because less capital in the streets means less capital goes to our partners and through us as well. Yeah, there is nothing good, but we are fine. I mean, I like bear markets in terms that it's clears up the industry, less greed and more productivity. That's for sure. I'm again, as a builder, I like exactly these particular moments, because then I'm not so productive. But and in terms of this, again, recent hack, for us, I think we are in one of the best shapes comparing to others, is because, as I said, first, it really proves that what we are offering is a need for. So because people, indeed, the risks are unknown, people need to buy a bloody cover, and we know perhaps we have the best answer and which one and where to get. And in terms of the providing capital, again, we are sorry for that, but we are perhaps the best ones because we are offering the widest diversification, right? Because someone indeed heavily impacted and someone is not at all, and we are somewhere in between. So yeah, thanks for the question, but we are all right. Yeah.
Well, that's good. It sounds like we're all going to survive. Good. Robert, I realise I didn't actually ask that final question to you. How are you guys? Are you looking forward to this bear market to get your head down and build?
A bit, yeah. Back to the point of growing slowly. I mean, there's no reason for us to want $1 billion in TVL immediately. And I think our system, especially, given that it's something very new, I think it may take time for people to get used to the idea that it's truly risk sharing rather than insurance. And people are uncomfortable with certain aspects, I think, until it truly proves itself. So I think good protocols, real protocols, solid protocols will be the ones to come out of the bear market alive. Ones currently surviving on Ponzi schemes, Ponzi-nomics, and this and that, and relying on line go up, I don't think we'll be quite as well off.
Well, look, I hope that everybody on this space is able to live through this market. I think we all will. I think these are some of the better protocols out there. The whole of DeFi, not just in terms of in the DeFi insurance sector, which is only a little tiny one anyway. But look, we've come to the top of the hour now. I wanted to thank you all very much for coming and joining us on the chat here. I think it's actually been a really interesting one in terms of we're all fairly aligned in terms of disclosing more information to our customers and helping people, avoid the risk. I think there are definitely some things that we need to work out, between ourselves about the how we look at some sort of universal risk metric, or maybe we go away from that and give people free realm. I'm not sure the answer, but it's been a thoroughly interesting chat with all of you folks, and best of luck out there in this coming bear market. I hope to speak to you all very, very soon.
Thanks a lot, guys.
Thank you.
Thank you so much for having us. It's been fun.
Cheers, guys.